Hi, been a long time. How are you? I'm pretty good. Thank you very much for asking. 22 went, and I'm glad to see it go. 23 is here. It's kind of going the way 22 went, but regardless, here it is in terms of what the numbers are today. It is in end of January. I'm Jeff Barton, and this is the Mortgage Minute. 6.20 is the 30-year fix. 5.25 is the 15-year. 5.80 is FHA. 5.72 are the jumbo loans, and 6.04 is the 5/1 ARM. All of these things are down from their highs of last August, which were about 7.5 for the 30-year fixed. If you're trying to get out there and get a loan, if you want to buy a house, now's a pretty good time. In that, what we haven't seen is rise in real estate prices the way they were going up. They're going, I guess, year over year about 3 to 4%, which is really down from the 11% it was last year or 16% it was the year before. But if you are a seller, let's just say you want to sell your house, maybe you have to negotiate a little bit on price, maybe you have to negotiate a little bit on terms. But the reality is you're up about 30 to 40% over the last 4 years in terms of the equity in your property. So I think you're doing pretty well. Let's get to some other interesting things in the news. I often look to the most famous people in the financial world to what they have to say about things. Hold on to your money. That's Jeff Bezos. Okay, well, you're going to listen to him. 30 years ago, nobody knew who Jeff Bezos was. Now he's the second richest guy in the world. He kind of goes in and out with Elon Musk in terms of that particular title. Here's another one. Well, we'll come to a very bad ending. That's Warren Buffett about crypto. I totally agree. I still can't find anybody who says to me, hey, this is what crypto is. Don't know what it is. Don't know how it's valued. Although blockchain, yeah, that's a real thing. But crypto, no. And anybody who's invested in that, well, good luck on that. The share of American adults planning to buy a home this year is down to 13%, down from 15%. That doesn't sound like a lot, right? But when you consider 330 million Americans, 5 million homes sold last year, that's still a pretty big number. Although what we haven't seen is the number of homes being built rise. That's what we really need. Last year we had actually a record number of closings on homes being built, about 1.5 million. We still need that for about 4 or 5 years, maybe even longer, to catch up with the demand. That would lower home prices, and that really is the critical issue here, isn't it? Like a lot of things, supply is the issue, whether it's inflation or whether it's housing. What we're looking at is not enough, so therefore what is going to be driven up by the demand, especially in the marketplace. Lots of millennials out there want homes, lots of Gen Zers also. Baby boomers are hanging on to their homes longer. Why? Because they're living longer. And let's just face it. If you're son, daughter of a person who's in their 70s and still own their home, they're going to live there probably for another 10 or 15 years. You're not going to get your hand on that, or they're not going to be selling those houses. And anybody who bought a house at 3% mortgage interest rate are not going to want to sell their house now or ever. 3% mortgage, whether it's a 30-year, 15-year, or any of the range that we talked about earlier, yeah, you're probably going to want to hang on to those loans. Okay, let's see. What else do we got here? We got a minute and a half left. Existing home sales. Let's see. Too soon to say inflation is beat. That's true. Service sector is certainly things that people are looking at, and the labor market. I just saw a thing on, I don't know whether it was MSNBC or whether it was CNBC or whether it was Bloomberg, but talking about the labor market, the tightness in the labor market. Walmart is looking to up their particular hourly wage 15%, was it 15, 17%. I think they're going from $12 to $14, which doesn't sound like a lot, but 17% raise for a Walmart employee in a lot of the country, that's a big deal. And so if they're doing that, that tells you that attracting labor for any kind of job, let alone service sector job, is going to be problematic in this year as well as in the years to come, unless we get a strong recession, which I don't think we're going to have one. We're going to see probably this labor market maintain the, what am I trying to say? It's going to push inflation up higher, and it's going to take longer for inflation to go down because the labor market is so tight. That's what I'm trying to say. Let's see. Okay, here's another quote. from Jason Furman at Harvard. Recession far from certain. I think that's also true. I think we're going to see a recession. I was predicting on our radio show at KCAA and on YouTube, Jeff Martin, the Mortgage Voice, that we are going to see a recession probably in Q2. But now we're pushing that off, maybe Q3, maybe Q4. And the reason for that, obvious, is that it doesn't look as bad as it did. We'll see what corporate earnings do in the Q1. We're only in the mid-January sector, and we'll also see what the Fed does. I guess everybody's expecting a 25 basis point raise in the Fed tightening in order to try to continue to curb inflation. But as that goes, a lot of it goes. Anyway, I'm Jeff Barton. That is the Mortgage Minute, even though it's 5 minutes. Appreciate you tuning in. We'll try to get back to you as soon as possible. Bye.